So it is February 2024. What's going on in the housing market? So, as we look at it, same kind of story, low inventory, high demand. What was interesting in what we saw in January is that January, because it was gloomy, the activity both on the buy and sell side was a little bit kind of sluggish. February, we had that little bit of a snowstorm, and then you know what? That kind of went in and was like, okay, it kind of slowed things a little bit. Now we got a little bit of warmer weather. Most of that snow is melted. We're starting to see this turnover. A lot of people getting ready to put their homes on the market. And, we're seeing now some more inventory. And what I said, let's say demand is probably at like a 60% level, and let's say supply is at a 30%. We're probably only going to see maybe 10% more of demand come in the market in the spring than what we have today. But we'll probably see about 25% more supply. So it's still going to be, a seller's market where we still are seeing highest and best low inventory. But the ratios of, buyer to seller should shift in a little bit more of a balance as we come into the spring. I've prepped a lot of the homeowners over, the months, be ahead of the curve, be ahead of everybody putting their home on the market. And we're starting to see that. We have inventory getting ready to drop in the next week or two. And we should see a little bit more carry on. So, where are prices going this year? I think as a balance across the board, a lot of the major, analysts are saying anywhere from, say, 2 to 5% nationally. I think we're going to probably see at least a 5% growth this year. There was something came out, I think, with the housing index for inflation was about 7%, which is why they're talking about the Feds right now that they're going to hold off on lowering rates, which I think they're going to hold off probably to at least the third quarter. So we're starting to see that, New York was up 7.4%, year over year, according to Case Shiller, which makes sense. And that's the state of New York, the metro market area as well. So that makes sense for us of what we've kind of seen. All of the major, Zillows, Fannie Mae, Freddie Mac, they're all kind of average about 3% this year. Like I said, that's national. I wouldn't be surprised to see us more like 5%. So big thing is interest rates. Feds had, talked about lowering the rates. The spread between 10-year Treasury and the mortgage rates came down a little bit. We were seeing some stuff in the low sixes, 6.5. It's up a little bit now. It's probably in those high sixes, maybe touching that 7 every now and then. But it's going to fluctuate probably between 6 and 7, let's say, over the next 12 months, I think, unless something dramatic happens. Hopefully, we don't see any major changes, in interest rates. It is an election year, so I don't think you're going to see major policy either way. Chief deputy economist First American had put out, the spread is not always consistent. It actually widens during periods of economic or geopolitical uncertainty, as has been the case in today's market. We saw that a lot. We'll see what the election does. That does usually create some uncertainty, but a lot of people sit on the sidelines. Senior VP and Chief Economist of Fannie Mae, we anticipate that after the past several years of extreme volatility in interest rates, the 30-year fixed rate mortgage will continue to moderate over the course of 2024, moving toward a rate below 6% by the end of the year. That statement was put out before, that 7% housing inflation number came out. So I think that's probably going to be not necessarily the case. I don't think we see that under 6, maybe the end of the year, but honestly, my guess, 2025. So where does that put us? What do you do? If you're looking to buy a home, listen, if you can do a 6.5, you could probably do a 7. You could do a 6, you could do a 6.5. You're going to see those fluctuations. You can't time that market just like you can't time the stock market. So if you're looking to buy, listen, you got to be able to compete. You want to make your offer as strong as possible, but it's still a great time to buy. Plenty of our clients are very happy that they've bought over the last couple of years and will continue. If you're looking to sell, listen, you will probably be able to maximize with the low inventory out there. Sometimes it makes sense getting the house, in its best proper light of what we could do. Sometimes it doesn't make sense for that. So we look at the options. Does it make sense? Are we doing as is? Are we going on the open market and making it its best possible thing? So when you're looking to sell, it's what makes sense for you, and we'll go over different options there. So overall, strong housing market. We still have a strong U.S. economy. I do think that will continue for the next few months. We'll see some more inventory. Good time to buy if it's right for you.